Welcome to Mad Money. Welcome to Cramer. By the way, friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate. So call me, 1-800-743-CBC. Tweet me, Jim Cramer. This morning, listening to our network, I heard a fund manager blast this market because of all the froth. Our excellent anchor, Frank Holland, pressed her on the notion of froth, and she reiterated that the market was riddled with it. To which I say, if this is froth, bring it on. Honestly, this market really does have a lot of froth in it. Something we see every day, including this one, where the Dow dipped 11 points, S&P advanced 0.03%, NASDAQ edged down by 0.01%. But you have to ask, why hasn't the froth that we're all aware of destroyed us? You know why? Because there are enough very positive stories out there, stories that make so much sense they can overwhelm the froth with rationality. For example, today, we had a giant run in Amazon, up almost 3%. Why? It's a follow-on move from yesterday's announcement that the company will be moving to same-day grocery delivery, which the analysts wrote about overnight. Now, this is an incredibly disruptive initiative that was basically ignored yesterday. Given that delivery is free with Amazon Prime, it could spell real problems for Instacart, perhaps even DoorDash and Uber. Just as importantly, this announcement changed the narrative about Amazon. You see, for the past 2 weeks, the story of Amazon was about how its AWS business had fallen behind Google Cloud and Microsoft Azure, its principal competitors, because it's using its own slower chips instead of buying them from NVIDIA. It was a very damning storyline. This week, though, we remember that Amazon's also a retailer, arguably the best retailer in the world. That's rational, not frothy. Or how about Eli Lilly? After that disappointing pill form of the GLP-1 drug, which didn't cause enough weight loss and the subsequent clubbing of Lilly's stock, insiders started to buy the stock like crazy. Buy. CEO David Ricks and board member J. Eric Frywald, the CEO of IFF, not of his company, IFF, bought $1 million worth each. Daniel Skowronski, the chief scientific officer, he bought $634,000 worth. And Jacob Van Naarden, he's president of Lilly Oncology, bought $647,000 worth. These are not small amounts. They're not painting the tape, so to speak. This is a big deal. To me, the insider buying says you should buy Eli Lilly, too. And I re-rated the stock positively for my charitable trust at today's monthly CNBC Investing Club meeting. Rational. Charles Schwab announced a 17% increase in net new assets month over month. That's an amazing gain, and it totally justifies the stock's 2.3% move. Rational. The U.S. might take a stake in Intel because its balance sheet needs some help, as we learned late this evening. Rational. But how about the froth we never stop hearing about? Okay, first, let me explain this concept. How do we explain froth itself? Well, it's a little like what the late Justice Potter Stewart said about pornography. I know it when I see it. But basically, a frothy market is one where lots of stocks keep roaring higher on, at best, hype. For example, yesterday, an outfit called Bullish came public. I find that name in itself irrational. You don't name a company bullish when a bear market could always be in the offing, and at some point there will be a bear market. It's like putting a target on your back. I know that Bullish is meant to be the institutional version of Coinbase, a cryptocurrency exchange for the big boys. Of course, this kind of thing should have been done by a national bank. We all know. How about a J.P. Morgan? But they missed out. They were too worried about a future regulatory crackdown that never came. Call them not visionaries. Bullish had an explosive gain right out of the gate yesterday, and even though it pulled back from its highs, it rallied another 10% today. Problem is, the documents indicate that Bullish plans to prioritize stablecoins on the Solana network, a cryptocurrency that few people use. Why? To make Solana go up? Because it wants the currency to be well known? Who knows? Irrational. Bullish, the company, is as frothy as it gets. Or take D-Wave Quantum. I think quantum computing could be a huge way to disrupt almost everything someday. A faster way to do high-performance computing for certain. Rational, assuming you're betting on this technology for the long haul. But is anyone really doing that? When I listen to what D-Wave wants to do when they came on our show, which is pretty much everything, and how it's gotten the money to do so, largely by selling it the money stock to the memesters who bid it up, I say irrational, frothy. Oklo, Wants to build a small nuclear reactor that runs on nuclear waste. Love it. We need nuclear power, but it may take years to build. Make that years and years, even if it's a small-scale production. The stock's up 247% year-to-date because this administration is even more pro-nuke than the previous one. But, man, it's really hard to construct a nuclear reactor. The process takes forever, and the cost overruns are often endless. I'm not so sure why Oklo would be any different. Irrational. Flying cars, supercharged crypto ETFs, secretive companies that consult in magical ways. All irrational. I could go on and on. Is the widespread irrationality a reason to sell down your positions in perfectly rational stocks? Absolutely not. There are too many Amazons and a large but not overwhelming number of irrational, so I think we're fine. Now, I'm sure many of the skeptics out there would say that there are so many new companies buying a huge amount of crypto on margin. These skeptics want to understand crypto, but they can't get their arms around it. They don't get how there's a consultant company that's won over both the government and the private sector by saving them fortunes, like Palantir. This stock, more than any other, any quantum or nuclear biotech, is the one that truly rankles them. To me, that's the most irrational view of all. Not about Palantir, but about the view that they have. Palantir is a talented company with a messianic leader who knows how to win big contracts. It's very hard for this to value the stock. If you use traditional metrics like earnings per share, the valuation looks insane. But if you use the rule of 40 the way we do on this show to judge enterprise software stocks, you can understand why this thing must stop running. It's incredibly cheap. Palantir rational? Let's just say there's no method to its madness. Now, here's the most important thing I can possibly tell you at this moment. We had a perfectly good market like this in the 1990s with much higher interest rates. It kept roaring for the better part of a decade. Then we got to the fall of 1998, and we began to see stocks like Circle Internet or Figma or Bullish popping up and going sky high. They would rally and rally for no reason. And the year went on, and the growth got worse and worse. And then in 1999, we lost the rational side of the market. All that mattered was the irrational. Hundreds of companies came public in this period, and nearly all of them were gone 2 years later, along with a whole generation of investors who permanently soured on the market. By the time we got to 2000, it was almost pure froth. We were talking about companies that had no revenue, no business plan. We saw companies all doing the same thing, search engines, dark fiber pipes, or internet retail, and they had nothing. When it's so obvious, when we have 10 Palantirs and nothing but D-Waves and a dozen more IPOs like Bullish, then we're in real trouble. That's what the late dot-com era looked like. But that's not this market. Sure, there's froth, but there are also perfectly legitimate moves in the stocks of great companies. I have been calling this the year of magical thinking, but the truth is you can't get the runs in the good ones without the runs in the bad ones. The bottom line, we are nothing like the end of 1999. We are nothing like March of 2000 when the dot-com bubble officially burst. So don't quit the market because of quantum computing or jets and cars. We are still, in a word, rational. Sam in Massachusetts. Sam.
Jim, I got a question about one of the biggest companies in Europe, that is Novo Nordisk. You see, shares have recently taken a 64% dip from the recent highs, and I'm wondering what you think about whether or not investors should be considering buying this dip, given that this
they're very poorly run. I don't know this new CEO, but they are incredibly poorly run, and I'm not going to bet that they suddenly are going to change stripes. They take my breath away about how poorly they are. Frank in New York, please, Frank.
Hey, Jim, how you doing?
I'm doing well, Frank. What's happening?
Hey, Jim, finally it looks like SoFi has arrived. Do you think this could keep growing into the $35, $40 area?
Okay, so I recommended this stock at $4, $5, $6, 456, 456, 456. Anybody who listened to me, I want you tomorrow to take your cost basis out and you let the rest run, and we will be thrilled. That's my take on this one. Can't buy it now. Cost basis out, rest run. Our current environment is nothing like the one we had around the dot-com bubble. So don't quit the market just because of some speculative names going higher, even as they are frothy. Everybody tonight, are students rethinking the cost of a college degree and focusing more on technical skills? I'm checking in with Trade School Universal Technical Institute to get a better read on the situation. Then Cisco, the newest holding of my Chapel Trust, reported yesterday. I'm breaking down the numbers of this software security company and network company and giving you my post-earnings thesis. A little more positive than the market. And we held our monthly meeting for subscribers to the CNBC Investing Club earlier today. You know I want you to join. And we had so many amazing questions that we figured we'd answer some tonight. You do not want to miss this. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.